Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Friday the 8th of February 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. Very quiet as far as European majors were concerned yesterday. Only very modest moves in both the euro and the British pound against the US dollar. The Australian dollar, however, was on the back foot once more, sliding to a 5-week low, down by around 0.27% at 79.80 shortly before we recorded the video. I'll look at the reasons behind that continued slide a little later on in the video. It wasn't all one-way traffic in Australasia though. The Kiwi, the New Zealand dollar, managed to claw back some modest gains in yesterday's session, up by around 0.15%, although of course if we look at the weekly move, it's still sharply lower over the last 7 days. Elsewhere, the dollar was on the front foot again in the emerging markets, taking a further 0.5% off of the Brazilian real, and it just seems to me that dollar traders there keep pushing on an open door and it keeps giving. In terms of gains elsewhere for the dollar took money off of the South African rand, which fell by around 0.36% against its US rival. Dollar index for its part pretty much unchanged in the session, 96.59 trading a short while ago, and that was up by just 0.08% over the last 24 hours. Okay, what's on the calendar then? Events that may move the markets today. A pretty busy calendar. We've already had plenty of data out this morning. We had labour cash earnings from Japan for December, a speech by the Fed's Jimmy Bullard, the RBA, Reserve Bank of Australia monetary policy statement, more on that a bit later on, and Economic Watch's survey data out of Japan as well. To come, French non-farm payrolls quarter on quarter for Q4 2018. That's followed at 6:45 GMT by Swiss unemployment for the month of January. And then at 7 a.m. we have balance of trade data and current account data, if I can say that, out of Germany. Of course, we talk that the EU and Germany may be next on Donald Trump's trade list. This data will take on extra significance, I think it's fair to say. At 7:45 we get a chance to peek under the hood of the second largest economy in Europe with the release of French industrial output for December. And then at 9 o'clock, similar data out of the Eurozone's third largest economy, that of Italy, and we'll have industrial output month on month and year on year for the month of January. Then we pause before crossing over the Atlantic at 13:15 for Canadian housing starts in January, and then at 13:30 probably the pick of the day's economic releases in the form of Canadian unemployment data. Okay, then we move on at 1800 and cross back over the border for the weekly influential US oil recount from Baker Hughes, a list of course of the operating and active drilling rigs in the USA over the last week. And then at 2030, if you're still in the market, we welcome back the CFTC Commitment of Traders reports. Obviously these were suspended during the recent government shutdown, but they're back in operation now, and I think we're almost caught up from the backlog of data, so look out for those and comments on them thereafter. Okay, breaking news and comment then that's caught my eye even overnight. First of all then, the RBA has been speaking again. The Reserve Bank of Australia has cut its GDP outlook on what it says is a weakening Chinese economy and cooling domestic inflation. And the bank now expects GDP growth till the end of June, that's the end of the financial Australian year, of 2.5% versus its prior 3.25% forecast. So quite a significant slash. Though of course many countries would still be very happy with growth of 2.5%, but it's all about expectations, and that explains the continued weakness in the Australian dollar. Donald Trump has seemingly ruled out a meeting with his counterpart President Xi of China before the 1st of March trade talk deadline, and the market took that quite badly actually. I think again, feeding to sentiment, if the two heads of state were to meet before the 1st of March, then perhaps there was more chance of a trade deal being done than not. Olaf Scholz, who's the new German finance minister, has rejected claims that the country is heading into a downturn despite a continuing series of weak macro data points, says the FT. And to be honest, it's hard to see how he can say Mr. Schultz can say that German manufacturing industry, of course, a very large part of their economy, and recent data points around that sector have proved to be very negative indeed. Okay then, food for thought, something to take away with you into the trading day and beyond, and why not think about this? We saw a second month of bumper US jobs data last Friday, and there are now more than 6 million job vacancies unfilled in the USA currently. So what are the fastest growing jobs in America, and where are they based? I won't take this data too seriously, but it is quite an interesting look at the state of play in the jobs market in the States. What's very interesting and very apparent, first of all, is that in places like California, I believe that's Arizona, and Florida, solar panel installer is a very popular new job description. Purchasing managing index up here in the Midwest, extraction worker here in where the oil industry is prevalent, wind service, turbine service technician, or wind turbine service technician, if I can put it like that, here in the heart of the Midwest, and you get the picture. I'm not sure about animal trainers here in the Pacific Northwest. Maybe there was a new attraction opening, but you get the picture. It's very interesting, even if we take it with a little bit of tongue in cheek. Okay, it's risk warning time. Please do read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the use of leverage products and the suitability for you, then please do contact your Pepperstone account representative. We'll be happy to talk you through that. And as I say, please do read this risk warning thoroughly. Thank you for your time today.